Hello and welcome. This is BQ Prime. I'm Agam Vakil, and you're watching the F&O Show, a show in which we take you through all that is happening in the futures and options space in Indian equity markets. At the moment, we're looking at quiet moves this morning. It is, of course, the Bank Nifty expiry. And yesterday, in fact, we had a V-shaped movement on most benchmarks, taking out a lot of stops. The question really is, can we expect, such a day today as well? At least as far as morning trade is concerned, we really haven't seen substantial moves either from the Nifty or the Bank Nifty, both of them trading marginally within the vicinity of where they closed yesterday. Nifty, in fact, is up around 1/10 of a percentage point, and Bank Nifty, on the other hand, down by around 3/10. It's been a quiet day. Of course, so we are looking at a lot more in terms of options expiry with respect to the Bank Nifty. But before that, to just address what's happening in the Nifty as well, in terms of the options, and that, of course, is going to expire tomorrow, we're looking at a lot more activity around the 19,400 mark. Of course, calls and puts written there, quite potentially straddles written there as well. We still have max OI at around 19,500, which could 19,500 calls specifically, which could perhaps serve as some sort of resistance, at least in today's day of trade. It's the pinstrike that a lot of traders may want to take out. And of course, on the lower end, it is a 19,400 put, which also has max OI. This is, of course, tomorrow's expiry. In today's day of trade, as far as Bank Nifty goes, we're keeping an eye on a maximum open interest in the likes of the 43,700 call. And on the lower end, we are keeping an eye on the 43,500 put. That's a 200-point range the traders are expecting to move within. And this is the market. Right? For now, it is, but of volatility going ahead. Let's see what comes up. To understand what we can expect going forward, we are in conversation with Ajit Mishra. He's the SVP at Religare. Ajit, good morning, and thank you so much for joining in. What are you making of the market cues, especially what we've seen in the past few days, and what can we expect going over the next few?
Yeah, good morning, Agam. So, yes, it's been a decent rally, I would say, because, just a few days ago, we were testing 200 EMA in the benchmark index. Nifty tested 18,800 mark. But since then, we have seen decent recovery because 600 points kind of a recovery after 1,000 point kind of a decline. It's somehow eased the pressure that we were, seeing in the markets, and the possibility of a breakdown below the long-term averages have also subsided, substantially. But now we are closer to the resistance zone because 19,500 was the zone basically where we had the breakdown in the index last time. So as you were like sharing the option data, also 19,450 to 500 is the strong resistance area as per the call base also. So I feel that traders, those who are sitting on the long side, they should at least book partial profits around the current levels, and they should maintain stop at 350 now. In case if we manage to surpass 19,500, then there's a possibility that we might inch toward the previous swing high, which is close to around 19,850. Otherwise, we'll again spend some time in consolidation, and alongside the Nifty, since we have weekly expiry of banking index, except yesterday when we saw some outperformance in the banking index, largely we have been underperforming the benchmark. So we need this underperformance to subside, with the banking crossing 44,100 mark decisively. So since we are closer to that mark in the banking index also, I feel that it's more prudent that one should stick with the stock-specific approach in today's market until we decisively break these hurdles. And but yes, since we are getting opportunities on the both side, the bias slightly have shifted on the positive side. So one can look at the sectors which are aligned with the market move.
All right. So that's the view on the Nifty and the Bank Nifty. And of course, in terms of all the stock futures which are active today, we do have a lot more movers on the back of earnings. But as far as the Nifty counters are concerned, we have BPCL advancing by around 3.2%, followed by Cipla up around 1.6%. And Dr. Reddy's, of course, 1.5% as well. These are all the gainers. Among the losers, well, we have ICICI Bank and Kotak Mahindra Bank putting some amount of pressure on the banking indices. and NTPC down by around 7/10 of a percentage point. But none of these counters are losing over 1%. So it is, as I mentioned earlier, a quiet start to this trading session. The question really is that where do we go from here based on some of the cues that we are making out? Um, even besides that, even in terms of some of the key earnings, we really haven't seen a super sharp moves, at least for all the stocks pertaining to the futures and options space. But on that note, let's shift focus to all the calls that Ajit has for us. Ajit, I believe you have two stock ideas. Can you take us through those?
Yes, certainly. So, since we are seeing recovery across the board, means though the some of the sectors are still underperforming the benchmark, but if you'll see that we are seeing buying interest on rotational basis across sectors. So I feel now that IT, after underperforming for quite some time, should also participate. And within the IT majors, I feel HCL Tech is the best bet to look at because it didn't participate much during the market decline and is currently hovering around the record highs. And I believe in the next swing, it could easily test 1310 levels in a day or two. So one can look at SCL Tech for the long position with 1265 as a stop loss and 1310 as a target area. Another important aspect it is that L&D or the other capital goods counters are also witnessing decent traction, and after this recent pause, it's offering a fresh buying opportunity where the risk reward is very much favorable. So with stop at 29.45, one can go long in L&D also with 30.40 as a target.
Okay. Well, those are two calls coming in, one from the IT space and the other one's from the infra/cap goods space from Ajit. For now, of course, the benchmarks continue to trade where they were about 10 minutes ago. We really haven't seen any sharp changes, but I reckon the second half of this session could perhaps bring in more sharper views, considering we've already seen a sharp contraction in a lot of these option premiums with respect to the Bank Nifty. We'll keep an eye on that. On that note, Ajit, we thank you for joining us and taking us through your views on the markets. And on that note, we also sign out. But don't go anywhere. There's lots more lined up. Stay tuned to BQ Prime.